Welcome to another Edgewonk deep dive, and today we have quite an interesting journal. It took me some time to go through all of this data and make sense of it, but I think we can learn quite a bit when it comes to strategy development, performance analysis, and how to go about your trading strategies. So the first thing, when we take a look at the home screen, we see that the trader is currently in a drawdown. The win rate is around 55%. But the one thing that caught my attention is the average P&L. So what you can see is the average winning trade is around 14 pounds and the average losing trade is around 30 pounds. So he's losing twice as much as what he's making on his winning trades. That's typically not a good sign. It doesn't have to mean that the strategy is necessarily bad, but if then the win rate is also not great, this obviously can lead to a lot of problems. Another thing I found very intriguing is when we go here to the R multiple, we see that the average reward to risk ratio is here 0.78 for that trader. And of course, if you're shooting for a reward to risk ratio that is that low, you need to have a much higher win rate to become profitable or to trade profitable. So there could be an issue here that the trades that the trader is shooting for are not large enough, and that makes it very hard to trade profitably. But let's keep going and let's start digging into the performance. One of the first things that we can do is we look at the risk distribution to see if there are problems with his position sizing and risk management, but we can see there are no outliers here on the left, which is always the thing that you're looking for. Here we can see the largest losses are here, but they are still very closely clustered to the center. Of course, they're a little bit larger than the average loss, but I wouldn't say it's such a big issue here. Next, let's take a look at the trade management. And here we can see that the actual performance in blue is above the potential performance, which is a good sign. And it means that the trader is not mismanaging his trades. So he's not exiting his wins too early necessarily and cutting his winners too short or let his losses run too long. Looking at the holding time, what is interesting is that here on the right side, you can see you have more red dots clustered, which means that on the trades with a longer holding time, he is realizing more losses. So the longer he is in a trade, the more he is likely to realize a losing trade. When we look here at the cluster of the green trades, they are all clustered here very close to the beginning, and those are the trades with the shortest holding time. So it seems like the trader on the shorter holding times to a maximum of 5 hours, that is where he is making most of his money. When we go to the setups, we can see that he has only one profitable trading setup here, but there are only 5 trades. The big thing that is worrisome here is this setup, D1 intra level, 18 trades, and he is losing quite a lot of money, almost 100 pounds. And when we go back to the journal, you can see that this is then making up for most of his losses. So this is a setup that you need to investigate more and further. What I found really interesting, and I don't have an explanation for it, when we look here at the performance by time and we look at the weekday, he is profitable on Mondays. 14 trades is an okay sample size, it's not the greatest, but what you can see is then after that, he is not making any money. So he's off to a good start, but then as the week goes on, he is only losing and he doesn't have another profitable day. So I don't have the reason for why this is happening, and this is something that the trader of this trading journal should ask himself. Why do you think that after Monday it's only downhill, and why are there no more profitable days? What could be the reasons that there's such a big underperformance after Mondays? I want to go to the trade comments, and one thing that I found super interesting here is the trades that he tagged with a perfect entry are losing money, just as when he's entering late and entering early, although those two don't have a lot of comments. And I was puzzled and I didn't know what to make out of this. 49 trades and he is losing quite a lot of money. Then I went into his journal and I pulled up a few trades, and what you can do is you could also use the advanced filter and look at the perfect entry trades, but I looked at them manually one by one. And if you pull up some of those trades here, so this is a losing trade, and he wrote took sell but think it's a mistake, and then he lists the mistake. And then when you go to the advanced data, it is still tagged as a perfect entry. And this is a problem because that skews your data. There are probably a lot of trades where you actually have a perfect entry, and those need to have that tag. But if you start out by writing down that do you think this is a mistake there taking that trade, it should not have the perfect entry comment, because then first of all it also skews your tilt meter. Now when we go through this journal, you can see the tilt meter is mostly green, but when you dig into the trades and look at the comments, there are lots of trades who seem to be mistagged. So that is something that the trader should correct, because it doesn't give a good and clear picture and an honest picture of the trading approach and the trading performance. It would be much more helpful to actually see more of those trades where the trader made a mistake, and then you can dig into them further and analyze what is going on, how's the performance looking like on the trades where you actually do have a perfect entry versus the trades where you don't have a perfect entry. That would be so helpful. And it's important that you're honest with yourself here when you're tagging those trades, and that you're very objective. It doesn't help to sugarcoat your trading behavior. The trading journal is really a place where you have to be honest with yourself to get the maximum value out of it. I looked at the exit analysis because when you see that your average win is so small compared to your average loss, and also your reward to risk ratio is really small, one thing that you should think about is, how do you get this to a better place? How do you increase your winners? How do you get a larger reward to risk ratio? And for that, we go to the exit analysis. And what we want to look for here is if you would move this horizontal line here, which represents your take profit, to a higher place, meaning you would increase the size of your take profit. Instead of, for example, using a 50 pip take profit, you would use a 100 pip take profit. How would this impact your trading performance? So assuming we move our horizontal green line up here, what you can see is that we would catch a lot more of those trades that are here shooting very, very high. But the trades that barely scratch the take profit area, like this one, those in here, this one, and those, they would not reach the take profit. So all of those trades that are currently winning trades would then probably, most likely, if there's not a good trade management in place, would be losing trades. So this would be one idea that the trader could start exploring. What will happen is if you double your take profit and you're shooting for a much higher reward to risk ratio, your win rate will naturally drop because of the effect that I just described. Some of the trades where the price doesn't move as much and they were previously winning trades are now becoming losing trades. So that's going to be an issue here, and that's often very hard to pull off when you see that your win rate is dipping. We're currently having a win rate of 55%, and then most likely the win rate will go down significantly more. Of course, you will have occasionally larger winning trades, twice the size, and you have to evaluate if this is an approach that is interesting for you. But the trader really needs to think about how to get the reward to risk ratio up for his trading, and also how to make sure that he's taking good trades and eliminating the bad trades. That's the biggest takeaway that I have for now. But let's keep going. And the trader, when he sent in his review request, he mentioned his missed trades. So we're going to the advanced journaling, and we're looking at his missed trades journal. And one thing that is quite interesting is when you look here, those are mostly green rows. You only have 2 red losses here in the missed trades. And that shows a little bit of a bias, maybe a hindsight bias, which is often or can often be a problem for entering missed trades, that you only see the good ones and you don't see the ones that would have lost. So that's something that you have to keep in mind. Otherwise, you will overestimate the profitability of your trades that you have missed. And when we go to the missed trades analysis, you can see that when we compared the missed trades as the trader entered it is around £260, and his real trades, as we saw, is a loss of 106. So you can see that there's a big difference here. It doesn't necessarily mean that all of the missed trades, you cannot trust the data here. You probably have to expect that there are also a lot of missed trades that you didn't enter that could have turned into a loss. But it's a very good finding here, because it shows that there might be something to evaluate and to test further. And when we go to the missed trades journal and we go here to the far right, he has a custom stat for missed trades. And there are a few tags that keep coming up. So it seems like heavy news release is a missed trade custom stat that the trader has been using here quite a lot. So it could be the case that trading on news, there might be an edge for the trader. Obviously, you also have to keep in mind that on heavy news releases, the spread and the trading costs usually increase quite a bit, and it's also more risky. So that's something to keep in mind. And he has a few off-screen, not too many, but a few off-screen comments. So what the trader should be doing is try to see how to get some of those missed trades into his actual journal, meaning how is he able to trade more of those trades that are currently in missed, that he would have missed, and how can he change his process? What are the similarities in the missed trades? And even more important, maybe, what's the difference between the trades that are here tagged as missed trades versus the trades that are in his actual journal? What is the big difference? Why are the missed trades performing so well compared to his actual trading performance? Again, I suspect there's a little bit of hindsight bias here and a little bit too much optimism, but by and large, this needs to be investigated further. And the trader has to look at those trades and look for similarities, and then find a way how he could start taking more of those trades that he previously missed. And I think those are the biggest takeaways here for that trader. First of all, make sure that your trading journal data is correct, that you're tagging the trades with the perfect entry, only the trades where you actually do have a perfect entry. That will help you improve your quality a lot and will give you more insights. Thinking about experimenting with a different take profit approach, I think would be really interesting. Maybe also a smaller stop loss. That could also be something to keep in mind. If you don't want to increase your take profit that much, maybe only increase the take profit by a factor of 1.5 and then pull in the stop loss a little bit closer, not halving the stop loss, but slowly moving your stop loss a little bit closer to your entry, not by much, but do it gradually. That would boost your reward to risk ratio, which is something that you definitely need to do here, because the average reward to risk ratio is just very small, and it's very hard to trade profitably unless you have a very high win rate, which the trader doesn't have at the moment. So I think those are the takeaways. Very interesting journal, and I hope the trader who sent in this journal can have some takeaways from it, can learn, and then adjust his trading approach. And if you want us to review your journal in one of the next videos, make sure to go to edgewonk.com/review and then submit your Edgewonk journal.